Hey, this is Warren Redlick. I'm here with Dave Lee. He did a video recently where he talked about two models of how to think about Tesla stock. And I love the models and I wanted to talk to him about it. I don't agree with him on the models, but I love the models. And I wanted to bounce some ideas off him and see how he responds. Dave, thank you for coming on the channel.
Warren, thank you. It's fun chatting with you as always. Yeah, I loved your invite to try to rip me apart and my models, and I'm glad to oblige in the conversation.
In your spreadsheet, your great model, you have 2022 delivering. I mean, 2021, I agree with you, 850,000 is a good estimate for vehicle deliveries. You go into 2022 and you have 1.3 million vehicles. And I don't think that's an optimistic view of Tesla deliveries for 2022. How did you get that number?
We have to take a step back here, and I could definitely model something more optimistic, like what's possibly possible. But most of my estimates are usually like in between kind of moderate to optimistic. And I try to play that fine line. One example is for 2021, a lot of people were expecting over 1 million vehicles just several months ago. I mean, we have to remind people of that, right?
Right.
And for me, I was always skeptical of that. I'm like, wait a minute, maybe 850, max 900. You just have to taper your expectations, I think. If Tesla would manage to do a million or 1.1 this year, then it would be a different story, But let's say they do 850 this year, you have to think it's hard for them to add a ton of new production capability suddenly, and it takes time to ramp. We see Austin, we see Berlin. You have these regulations, red tape, all this stuff, and then you have battery issues too, right? I mean, we don't have 4680s off the bat, so they're going to go to their backup plan, which is probably 2170s. So we're looking at a slower ramp, I think, for the first half of 2022 than what could have been theoretically possible just, let's say, 7 or 8 months ago. And that's why I just put a simple 55% volume increase. It could be higher, who knows? It could be 60% or 70% higher. But I think for Tesla to do like a doubling in 1 year, of course, anything is possible, but we need to look at what's realistic, right? And I think,
Right.
Something, 55, 60%, increase, I think is decent.
Right.
It incorporates the risk factors of a slower Austin ramp, a slower Berlin ramp, and also the pushing off of Cybertruck too, right? For volume production until the following year.
I'll just say the way I see it. Shanghai is still ramping. And I think Shanghai is on a path where fully ramped, it will be 600,000 or more vehicles a year delivered. I mean, I think they may be on a pace now. What was it, 44,000 last month?
Yeah.
Was that the number we just saw?
Yeah.
So 44,000, 50,000 would be 600,000 a year.
Yeah.
So Shanghai alone is on a pace for 600,000. Fremont is probably going to be on a pace for 600,000. So that gets you to 1.2 million. So Berlin and Austin together for 2022 would have to deliver only 100,000 vehicles in 2022 to have 1.3 million. This is why, I mean, I think there are other factors like supply chain. Like you mentioned batteries, and batteries is definitely a potential problem. But at the same time, it seems like Tesla is shifting some of its fleet to lithium iron phosphate batteries, which are in much greater availability. And, we're seeing that with Model 3 and Model Y. So, and then I think certainly the question, how quickly does 4680 ramp? But I don't think there's a shortage of battery supply. The other parts of the supply chain like chips or, what's going on in the ports right now where they're having trouble. I don't know if you've seen this story that there's ships waiting in line to get into the ports, like at Port of Los Angeles. So, I mean, I think there are issues like that. But taking it from 2022, I'm going to talk about ASP next.
Yeah.
The average selling price next. But taking it to 2023, you have 2 million vehicles. Yeah. And my impression is, well, I guess I will ask you this question. When you see Giga Texas Model Y lines fully ramped, how many Model Ys do you think? Well, actually, let me take a step back.
Yeah.
Elon predicted that in 2022, Model Y would be the best-selling car in the world by revenue. And in 2023, the best-selling car by volume, by unit volume.
Sure.
And the best-selling car by unit volume in 2023 would be about 1.5 million vehicles a year, just Model Y.
Yeah.
and then that leaves only 500,000 for Model 3. The 2 million number you have. This is the thing. I have tremendous respect for you, and I feel like there are people like Cathie Wood and Ross Gerber who I have tremendous respect for, who I feel like their bull cases are, well, I mean, Cathie Wood, if you get her going, her bull case gets pretty big.
Yeah.
But the bull case that she talks about tends to be softer.
So let's go back a couple things. So let's say next year, let's say Fremont. I like to be a bit conservative personally, just because things always happen. The thing is, with production, you're always going to have some hiccups, somewhere, and that stall everything, right? So let's say hypothetically Fremont does 500. Let's say Shanghai does 500. I'm trying to be more conservative here. And let's say you get 200,000 out of Austin and 200,000 out of Berlin the first year. Now that might sound really conservative for people, but it's just like, it's a new factory, right? I mean, it's like, I don't know. I think they could do possibly 300 the first year. 400 is stretching it for I think both factories. And so let's say 1.4. I mean, it's slightly higher than 1.3, but I could see 1.3 to 1.5 million next year. I could see if things go decently well, you could stretch it. Sure, they could knock it out of the park and do 300-400 in Berlin and Texas. But everything I'm seeing right now is if they had the 4680s, if Berlin was a little bit had more, I guess, transparency with the regulations, I would be more optimistic. But for me, it's a non-issue. I don't really care if Tesla does 1.3 or 1.6 next year per se, right? Being said, the next year though, for 2 million, let's say, we've got some challenges here in 2023, which is we probably won't have the $25,000 Model 3, at least in any volume production by then. So you're relying on Model Y mostly, then the Model 3, Model S and X, and the Cybertruck, right? So those basically, those cars. And so when you look at Model Y, I think 1.5 million is kind of aspirational, in my opinion. It's not something guaranteed. It's something that they could achieve if they actually are able to, I think, lower the price, increase their range by, just do. It's conceivable, but it's also something where a lot of things have to go right. And so I think Tesla can blow out 2 million vehicles in 2023. I think they can. The question though is, can we incorporate risk factors and hiccups and different problems that are likely going to happen and reduce our theoretical possibilities down to something 20 or 30% lower, into something I think is probably more realistic.
I think that the trouble I'm having is that you're calling this your great case, which would sound like the optimist case, and you're hedging your optimist case to be conservative.
Yeah,
the optimist case wouldn't be conservative.
Well, I have this great story. So back in 2014 or so on TeslaMotorsClub.com, we were having this great debate amongst all the early Tesla shareholders, and a bunch of the big bulls that during that time were convinced Tesla was going to produce and sell 200,000 Model S and X's. They were
in 1 year.
In 1 year, they were completely convinced. You could not convince them any other way. It was that was it. 200,000 S and X's. I'm not sure about that. You have the Model 3 coming out. It's going to cannibalize some of the S and X demand. And they were 100% arguing that there's no cannibalization, right, with the Model S and X. It's just going to increase over time. And we have to factor in different stuff, it's what's possible. Sure, Tesla could have sold, 200,000 S and X's in a maybe theoretical best case scenario. But for me, if the possibilities are low enough where I don't think they're as realistic, if they're not greater than 10 or 20% of the possibility, I feel like I want to opt more to what I think is the highest probable case, right? And so I kind of is it possible that Tesla can completely bomb it? Of course it is. So I want to take out kind of the edge cases, maybe the top 10 or 20% and the bottom 10 or 20%, and focus more on the middle, what I think is a little bit more conservative or realistic in my opinion. I mean, a ton of people, Tesla Q people will say I'm crazy for my projections too, right? They'll say I'm insane.
They've been wrong long enough. I don't really worry about them anymore. But I look at your numbers and I think, okay, well, let me ask you this question.
Yeah.
When Giga Texas is fully ramped on, let's just say Model Y, just Model Y, Giga Texas, how many vehicles a year of Model Y do you think Giga Texas alone will produce?
I think the theoretical limit globally, is this 500,000 Model Y per continent. So you have 500,000 US, Europe, and Shanghai. I think that's what Elon was thinking when he's saying 1.5 million Model Ys. Or generally speaking, there might be a little bit more US and Europe, or different shift. But and I think, yeah, it's possible. For me, also, there's also this wild card of the EV tax credit. I mean, if the U.S. passes this $7,500 federal tax credit, then yes, Tesla can blow out the numbers, and I will definitely probably update my numbers in a sense, because they could sell literally every car in the U.S. So yeah, they could sell more than 500,000 Model Ys in the U.S. alone.
There's the demand side of the question, and then there's the supply side of the question, the production side.
Yeah.
I have I guess, somewhat radical view. And I just want to say really quick, when you talked about people got ahead of themselves, there's another example of that, which was the Plaid event.
Yeah.
The hype leading up to the Plaid event, we all thought they're not doing the Plaid Plus because the Plaid's going to have 500 miles of range. And we had all these crazy ideas about what was going to happen at the Plaid event. And then the Plaid event was actually pretty boring. We got ahead of ourselves. But I'm looking at this, I don't really see a demand issue. I see an excess of demand, and I see there's a lot of room to lower pricing to stimulate demand. That's how I see it. But I just look at what they're building in Berlin and what they're building in Texas.
Yeah.
I mean, and you at least some of the time are in Austin, right?
Yeah. Yeah.
I mean, that's a pretty big building.
It's definitely a big building that could produce a lot, but I look at demand and supply as a little bit more complicated. Like, for example, back in 2014, people were saying there is no demand problem, right? It's always production, limited.
That's my view. That is my view.
Yeah, and this has been going on for a decade. This debate of, is Tesla, production limited or demand limited? To me, I think the reality is there's actually a fine dance between both, and it's usually not just one side or the other side. And one example is, sure, was the Model S and X production limited for a while? Yes, it was, but ultimately it's demand limited. We just have to grant it for what it is,
Well, Model S and Model X are much higher priced vehicles.
Yes.
And at least then wasn't that much potential to lower their pricing. But with Model Y, with, front and rear casting, structural pack, a lot of things that they're doing, they're going to have a lot of room to lower the price of Model Y if they encounter demand headwinds.
I would beg to differ with the Model S. They radically lowered the price for the amount of feature set. You were paying Model S performance back in 2012, 2013, over 100,000 for something that had 265 miles that went 0 to 60 in 4.2 seconds, that didn't have a lot of features that it has today. Right. They've radically lowered the price, probably $30,000 or $40,000 in effect.
Well, the long range was down to under 70,000.
Exactly.
Before the break, it was under 70,000.
Well, what I'm saying though is that today's long range is way multiple times better than the old performance model. I had a 2013 performance model. It can't even compete with anything out there right now. And so the Model S, Tesla did radically lower the price for the feature set, yet they didn't see a radical increase in demand like people were expecting. In the early bulls, we were expecting 200,000. The whole theory was, they can lower the price, make it better, and we're going to see a bump from 100,000 to 200,000 demand, right? And it makes sense in some ways, but the reality is there's a saturated limit per market segment, that people are willing to pay, and it's kind of a defined market segment right now. Take the entry level, compact SUV, or entry level luxury, let's say sports sedan market, the BMW 3 Series. It's kind of a defined market, and even though you have people entering in from other markets, ultimately when Tesla comes out with their $25,000 car, it's going to cannibalize, some of the demand for Model 3 and the Model Y. And so that's why there's always a cap, and Tesla is going to be aggressive in how they push the envelope with their new models. You think that Tesla is going to, lower the price with the Model 3 and Model Y? Yes, they are. But their real focus is a new next gen platform that's going to be radically cheaper. That's going to actually put some type of cap and limit on the overall kind of long-term demand for Model 3 and Model Y, I think.
I have actually angered some people when I've said that the 2023, I call it the battery day vehicle, the vehicle they hinted at Battery Day. I've actually said they're going to stop producing Model 3, that the space for Model 3 ends up being very small between Model Y and the Battery Day vehicle. There's not a lot of room for Model 3. Yeah. Maybe they just don't produce that many more Model 3s. And then probably the cost of producing the Battery Day vehicle will be a lot lower than the cost of producing Model 3 as well.
I think actually they should skip to more of these compact SUVs. Like that's where all the demand is nowadays. You know, I was at the Honda dealer and also Lexus dealer 2 days ago, and looking at some of the cars, the sedans just aren't selling that well anymore. You know,
right?
And so
that's been true for a while.
Yeah, this next gen platform, I think they go SUV and maybe different form factors or something of an SUV, have it different for different continents if they want. But yeah, I think that's going to be the big killer. And that's the thing. Tesla, I mean, they might be a little bit slow sometimes with some of the, let's say, what is possible. Let's say, we think 1 million cars this year would have been possible, but it isn't, or 2 million next year, but it won't be. Tesla won't hit 2 million next year, obviously. But the reality is when they produce or reveal a car, the quality will be much better than anyone realizes. And the $25,000 car, I think is going to be a killer, like compact SUV. And it is going to hit Model 3 and Model Y sales a bit. But yeah, I mean, still, Tesla could sell, 1 million to 1.5 million Model Ys, I think, as they get it better. But it's capped because this compact SUV will be so good that we're talking about just like, 5 million up to 10 million, let's say sales on just that platform, even higher feature-wise.
But if you say that, which I agree with you, I agree with you on. My number for the Battery Day vehicle, and let me take a step back. So I see the Battery Day vehicle as a platform rather than an individual vehicle.
Yeah.
And so it's an SUV, it's a hatchback, it's a minivan, it might be a small cargo van. There's a lot of possibilities for what that's going to be. But when you say 10 million, but you have 2025 4.4 million vehicles on your spreadsheet, what stops them from ramping the Battery Day vehicle going out to 2025? What stops them from ramping that Battery Day vehicle to much higher volumes by 2025 and 2026? I have 12 million of the Battery Day vehicle in 2026. Yeah. Which is obviously that's Super Bowl, Warren. They're calling me the dragon now.
I look at it, all things are possible, but certain things are realistic. And so, yeah, is it possible that Tesla could completely nail the Battery Day vehicle, the $25,000 vehicle, where they massively ramp production super fast, get it out? Possible, but I look at it much more realistic that it's going to have hiccups. Meaning it's a new vehicle platform, new parts. They're going to have to do massive innovation in terms of getting. I
think it's going to be 48-volt wiring, and and it may not have a steering wheel and pedals. There's all kinds of possibilities, right?
I mean, the way Elon is going to approach it, in my opinion, is he's going to massively push innovation for every single part to try to take off 5 cents, 10 cents, 20 cents. It's a matter of cents, for that vehicle. And it's going to be this huge amount of work, and they're going to come up with whole new machines that make the machine. You know what I'm saying? Like whole new production systems. And this is going to be, it's not the car that matters. It's what makes the car and all the engineering that's put into that. Just like, for example, the 4680 production ramp, we would think that, hey, they announced Battery Day over a year ago. Why are they having such a hard time? It's because the level of ambition is so high, that they had to go through all these crazy things. Same thing with the $25,000 car. You think it's just shrinking the Model 3, Model Y, making it cheaper. No, it's actually going to be huge amounts of machinery, new production methods, new stamping, new everything. And all of that is going to have some level of hiccups and learning curve, especially the first year or two, right? Once they get it running, then, you're going to see this huge ramp. But that's the only issue. The first couple of years, to me, it's the most likely scenario is it's going to be a killer car. The quality will blow away people, but the quantity of how many units they're going to be producing will likely disappoint the Super Bowls who are expecting, a big jump out of the gate.
The way you're describing it, like they're going to build it in one factory. And my take on it is when they decide to go forward with, which I think might be pushed to 2024, given that they've delayed Cybertruck and everything else, when they go forward with the battery day vehicle, the $25,000 vehicle, I think it's, just like they're doing Austin and Berlin at the same time, the next vehicle is going to be 3 factories at the same time, one in China, one in the US, and one in Europe. And those, my view is those factories, if you listen to Elon's interview with Sandy Munro, they're going to produce at higher volume. Like I think Texas and Berlin will produce at higher volume than Shanghai and Fremont because they're Gen 2 factories, we'll call them. Arguably, Shanghai is the same generation as Fremont. You could say that Fremont is generation 1, Shanghai's generation 2. But Berlin and Austin are the same generation. Let's call them generation 3. The battery day vehicle factory is going to be generation 4. So to me, Berlin and Austin ultimately produce much higher volumes than Fremont and Shanghai, like double, let's say. So if Shanghai's producing 600,000 fully ramped, and I think it might go to 750, then Texas should be producing 1.5 million. And Texas is like insanely large, so it even produces more than that. But Berlin, let's say, produces 1.5 million. And so you end up with, if Berlin produces 1.5 million, and I see it as Berlin produces 2 million, Texas produces 2 million, you got 4 million right there, and then you got the other 2 factories producing, and you're approaching 6 million with just those 4.
Yeah, so I mean, I get that, but you have to look at, okay, there's a let's call it like a stage, I don't say stage 1, but let's say, for the next few to several years, there's this first group of vehicles, which is the current lineup, Model Y, Model 3, and Model S and X, and Cybertruck. These are kind of the premium luxury vehicles, right? That whole Tesla. And in a lot of ways, these vehicles, in a sense, they do have some demand constraints with pricing. Like Tesla does need to tweak the pricing and the range and different stuff. They can to make it happen, but there is some constraints. Then you have the next stage or section, which is the breakout product, which is the affordable, let's say under $30,000 product. Now this product has almost unlimited demand, but the problem is the ramping of this product, which I actually disagree. I think you have to start the production at one site first, and my hunch is probably it's going to be Shanghai, because that's where Elon is banking on this new design team forming all that stuff. I mean, it could be Austin because that's where their engineers are at too. It could be simultaneous, but if it's simultaneous, like I don't know, it seems like, for example, one example is I was talking to this guy Marcus House. He has a SpaceX.
I know Marcus, yeah.
Love him. Great guy. And I was asking him, why is SpaceX making like SN21 and 22 rockets when they haven't even tested SN20? And his answer was really insightful. He's saying it's because SpaceX thinks the machine that makes this machine, that the process of production is more nice.
The machine that builds the machine.
Exactly. Is more important than actually the product. So they're willing to scrap the product. They don't even have to ever use whatever they made for SN21, 22. It's just the learning that they've gotten from actually trying it is worth it, right? And I think in the same way, it's like when they make this Gen 4 $25,000 car, they need to go through the lessons. Those lessons are invaluable. And if you're going to do a simultaneous 3 factory rollout, you're not going to learn the same lessons that you could have learned in just one factory and then tweak your production and then, roll it out to more factories. Like, yeah, you don't want to, for a new platform, you don't want to do 3 factories at the same time. I don't know, that's my opinion.
But, they're doing Berlin and Austin at the same time, and it's effectively a new platform for Model Y.
Oh no, that's proven. It's a proven Model Y platform.
No, it's front and rear castings and structural pack.
No, that's changing some of the structure. It's not changing the essence of the platform. Meaning, it's the same car. You're using all the same parts, right? Production.
No, it's not the same parts. Because
besides
you're replacing the front. The front casting replaces this. The structural pack replaces the battery pack, and then you've got the whole new battery lines, and they're doing those in 2 places.
Yeah, no, but if you think about it, it's like, for example, the entire let's say above the battery pack, the structure, right? You're using all of the same parts, right? The same windows, the same door handles, the same, infotainment, the same chairs.
Yep.
You don't have to redesign any of that stuff, like the same sound system, all that stuff. And even the way they're redesigning, the front and rear casting, the structure battery pack, we might see an interim thing where they're using 2170, cells. And it's a complicated thing where it's the platform is there. They're just making incremental. They could be some major things, but it's not a new vehicle, right?
Okay.
So it's a lot less ambitious than I think doing 3 new factories with their $25,000 vehicle.
Let's move past the number of deliveries and let's go to average selling price.
Sure.
So I keep hearing from people, and we're seeing it right now because of the weird economy that we're in, that the value of your vehicle goes up rather than down. Like you bought a vehicle, people are bought Model 3 last year for 50,000, are getting offered 55 for it now.
Yeah.
Which is true of non-Tesla cars right now to some extent as well. There's so much demand for new cars and used cars, but in your model you have the average selling price declining to 44,000 from 50,000 in 2022, and you're including FSD in that. Is somewhere in there, are you including the $25,000 vehicle?
Yeah,
in your model out to 2025. So let's take 2025.
Yeah, so anything above let's say 2 million-ish vehicles, I mean that's basically, I'm assuming that's more of the low cost $25,000 vehicle.
You're seeing Model Y and Model 3 S and X production combined capping at 2 million.
Basically, yeah.
Okay.
Yeah.
And I think that's pretty extreme, but okay. But so
because you think about it, let's say Elon Musk's 1.5 million prediction, let's say it falls short a little bit to 1.3 hypothetically, right? And let's say Model 3 is 500,000. Even that, if the new Gen 4 comes out and it overlaps, it could be less than that. That's 1.8 million, right? And then you add S and X, which is maybe 100,000, 1.9 million, and then let's add Cybertruck too, so that could be it could be, I think Cybertruck is a wild card. It could be 250 to 500. You don't
think it could be 1 million?
I think it can only be 1 million if they do variations off of it. Like in its current form of this massive truck. I mean, and again, a lot of this stuff is time frame, because what if in 10 years they make it, the features are so much better, and I don't know, they could sell more, but I think realistically it's 250 to 500 in its current form.
But let me go with that for a second.
Yeah.
In the U.S. alone, Ford sells 1 million F-150s, GM sells 1 million, whatever they call theirs, and Dodge sells it's nearly 3 million between just those 3 makers, not leaving out the Toyota Tundra and the Honda Ridgeline, whatever. There's all these other pickup trucks. It doesn't seem crazy to me that if Cybertruck is better than the Ford F-150, that it sells as many vehicles as the Ford F-150.
Yeah, I think long term
on the demand side.
Sure.
The production side is different, but on the demand side, it seems like it doesn't take that long. If you can produce, if you build it, they will come theory, right? If they make Cybertruck for $50,000, I think the pricing on Cybertruck is going to go up actually. But if they make the dual motor Cybertruck for $50,000 plus FSD, it's a really compelling product.
Yeah, I mean, I have a Cybertruck on order. I can't wait. I want to mod it. I want to tow something. I mean, I would love a cyber van. To do van life or something. But yeah. But I mean, again, possible Tesla can top F-150, but I don't know. The way I look at it is the pickup truck market. The people that I know who have pickup trucks. I know there are some tech, geeks who love pickup trucks, but they're not as many as this hardcore. This thing of the Cybertruck, I think it's gonna separate people. It's not gonna appeal to all of the pickup truck people. I think it's gonna appeal to a certain part of that pickup truck people and some new people, right?
Yeah.
And I think it really has to prove itself. I don't think it's going to be an easy 1 million, maybe if for example, in 5 or 10 years, it really just takes off incrementally, culturally, and it infiltrates the pickup culture. I just think it's a more formidable pickup culture than some tech people realize it is. Like there's a lot more to the pickup, culture. And I think even 250 to 500 in the first few years, if they can ramp up to that amount, it's going to be a huge success for Tesla.
I'm struggling with this because it sounds like you're saying they're going to take a while to ramp the battery day vehicle or the 25K vehicle, but in 2025, you've got them selling 2.5 million of them.
Yeah, I mean, okay, so yeah, that's the thing. If let's say you do half for this first stage vehicles, which is Cybertruck Model Y, 3, S, and X, and let's do half for this next gen vehicles, then yeah, you have maybe let's say 2.2 or 3 per section, and that kind of like to me it makes sense because the new vehicles will cap the old vehicles somewhat because it'll cannibalize, and it's going to take some time to ramp the new vehicles, just like it's taking time to ramp the Cybertruck. I mean, people were expecting the Cybertruck this year, you know what I'm saying?
Yeah.
But the reality is there's always, or most always, there's some type of hiccup, or especially with new production methods. And again, this $25,000 vehicle, I'm telling you, it's going to have a ton of new production, innovations, I think.
I think so too. I ordered the Cybertruck in the first hour.
Yeah.
So I was hoping to have it by the end of this year, and then I was like, okay, maybe I'll get it first quarter next year, and now it's like,
Exactly.
So I don't know if you heard. I don't know if you heard. I'm buying Omar Kazi's Model 3.
I heard that. Yeah, congratulations.
That's gonna be fun.
Wait, are you taking a cross country trip? Is that the plan from California?
I'm flying from here to Starbase to Brownsville to see Starbase. Then I'm flying to Austin to visit Giga Texas and spend a couple days in Austin. Cool. And then I'm flying to Los Angeles. My brother lives right near LAX airport, actually fairly close to Omar. Mm-hmm. So I told Omar I'd take him out to a nice sushi dinner. We found a place, or I found a place, and he said okay. And then the next morning we're going to drive back. So cool. And it'll probably be a 4-day drive. I wanted to do a 3-day drive, but I think that's too grueling.
Yeah,
that's like probably 15 hours of driving, not including charging. Sorry, that's more than 12 hours of road time, not including charging. So I redid it, and now I've got it to like 12 hours, including charging a day. So like 11 hours of driving, 1 hour of charging.
Yeah.
And that gets us to Florida middle of the 4th day, late in the 4th day, but not nighttime.
Yeah.
So, and we're going to stop at Giga Texas again for Omar because he hasn't seen it yet.
Okay.
And we'll do a couple other stops that we've talked about.
Nice.
But yeah. The other thing I wanted to ask you about. So I think I get what, I guess I just want to say really quick. It sounds to me like your optimist case is 60th percent and your pessimist case is 40th percent. And you're like my optimist case
exactly.
is like 90%. My optimist case is like 90% of everything goes right.
Exactly.
Your optimist case is 60% of everything goes
Maybe
right.
Like a 70 to 30. Yeah. Okay. 70 to 30. Like I could definitely make more optimistic predictions and cases, but it just makes those odds a little bit, lower, I think.
And your model here, you don't account for any robotaxi revenue at all. And you don't account for any energy revenue at all. Because, I think energy is like, is energy 15% of revenue now? Am I close on that?
I think it could be, yeah. It's over $1 billion, so yeah, per quarter.
I don't think it's as profitable as cars yet.
Yeah. So I kind of, typically when people do models, they do all these like separate lines for all the businesses. But I feel like a lot of times, like it can show all this complicated, projections, but most everyone who's doing projections, it's a guessing game, you're just throwing out, and I feel like if you can make it more simple, then it's a better conversation starter. It's a better thing to discuss. You can't discuss these complicated models, sometimes it's just too many things, too many moving parts.
Okay.
And so
let me go simple then.
Yeah.
I don't know if you've heard of my battery revenue model or if we've talked about it before.
Yeah.
But the way I see it, if you take to massively oversimplify it, let's assume that a $30,000 Tesla Model 3 has a 50 kilowatt hour battery pack. This is not true. I think the smallest battery pack on a Model 3 is 54 kilowatt hours, and you can't get a Model 3 for less than 40. But just to oversimplify radically, that works out to $600 in revenue per kilowatt hour, if I have my numbers right. Right, $600 in revenue per kilowatt hour, which is like, I think it's 600 million per gigawatt hour then. Yeah. Am I making sense?
Yeah. I've heard the battery model actually from you before already.
Yeah. So when I look at this, I think you probably follow CATL a little bit. They have announced their plan to scale up their battery production, which is lithium iron phosphate batteries. I think it was 1.2 terawatt hours by like 2025 or 2026. And I think Tesla is going to be the primary customer for those batteries. I guess my question would be, who else is buying the batteries? If CATL goes ahead and produces let's say 1 terawatt hours of batteries, and LG Chem scales up to half a terawatt hour of batteries, and BYD is its own consumer of its batteries, but there's a few other big battery makers. Panasonic's going to make its batteries. Who else is buying batteries in that volume? Besides Tesla.
Well, actually, like, okay, first off, like CATL, like I'm a big fan of them. I really think they're like one of the legit kind of companies that's actually scaling battery tech and actually making some real, innovations there. Yeah, I think CATL, they're agnostic in terms of who they sell to. So they will sell, as much as they can to Tesla, but others as well. So,
no, but this is my point.
Yeah.
Who else is ready to use batteries at that scale? This is my whole point is, if I'm right, and Tesla's going to scale production and produce 10 million vehicles in 2025, and really start ramping Megapack and Powerwall, then they're going to be ready to consume from the battery supplier a really, really large number of batteries. But if you watch like Volkswagen talking about their battery plans, if you watch, look at Lucid. I don't know if you know, I'm Lucid's biggest skeptic, but if you follow Lucid Motors' plans for how many vehicles they're going to produce, they don't get to like 500,000 vehicles till 2030, right? So, who is the big consumer of batteries that's going to buy from CATL if CATL scales that production? I mean, maybe CATL has its own business producing the equivalent of Megapack.
Yeah.
But I haven't seen much of that.
Yeah, actually, I think there are companies that will use CATL stuff. I wouldn't be surprised if they do their own stuff too with Megapacks. But in China, you've got actually a whole domestic, basically EV ecosystem there that's going to be using a lot of batteries, And then in Europe, actually, you do have, a decent amount of, new or just electric vehicles starting to take off. And if you take the US, if this federal tax credit passes and you get $7,500 off, you would imagine almost every single manufacturer, it's not just US manufacturers, it's anyone who, like all these car companies have factories in the US. Toyota, Honda, BMW, Mercedes, like every single one of these large manufacturers, they're just going to pour in, every asset, everything they can. So
I have an alternate theory on that. Let me bounce my alternate theory on that. Mm-hmm. I don't think that any OEM manufacturer is anywhere close to being prepared to produce EVs in volume. And I think what happened was they figured out that if the EV tax credit went through, then it would benefit Tesla more than anyone else, and it would accelerate their bankruptcies. And so they got to the Biden administration, and they had this big event where they talked about EVs, and what they really talked about was, we got to squelch Tesla.
Okay,
we can't have this EV tax credit because it will help. Because think about it, Tesla would benefit more than anyone else.
Okay, let's flip that on. Why would they even be at that event and even give lip service to a tax credit of $7,500 or $10,000 if they knew that was going to bankrupt them?
Because the government and the major corporations and the media all lie to us a lot. And look, they know that Tesla is going to wipe them out. This is okay. Sorry, it's my opinion that Tesla is going to wipe them out. That they're all going bankrupt.
Sure.
Okay, just even on your numbers, if Tesla takes that many sales away from the OEMs, they can't make their interest payments. They depend on selling a certain level of volume. I think my numbers are much higher than yours.
Yeah.
But and if I'm right, and I think that Mary Barra and whoever runs Ford and I think they all see it. There's no way they can produce electric vehicles at scale the way Tesla is doing it. They know they can't do it. They know they've figured out we can't do this, and they're playing the same game that Jack Rickard and the Now You Know guys said that the oil companies are playing, which is, let's slow Tesla down as much as possible.
Yeah, I think that's possible, but to me, the higher probability scenario of like 70, 80% is more of a scenario where if you're gonna have opportunity to get free money from the government, are you not gonna take it? Like this is significant money, right?
They don't get the money. The customer gets the money.
Yes, but this creates
And the customer only gets the money if they produce enough cars, and they can't produce the F-150 Lightning in volume. They can't produce the Mach-E in volume. They can't produce the ID.3 and ID.4 in volume. Volkswagen announced their plans for battery production, and in like 2030, they're going to be at like 240 gigawatt hours. Tesla's going to be producing that in Berlin in 2 years.
Okay, so why do you think they're having such a problem getting to, let's say, big numbers with EVs?
They simply cannot match Tesla's engineering for making EVs as competitive as the ones Tesla is making. And the way I put it, it's one of these things that when I look at the OEMs, this is the mistake I think they're making. They're looking at, let's say, the 2018 Model 3, and they're saying, let's see if we can make something as good as that, right? And by the time they get there, it's 2023, and Tesla's making the battery day vehicle.
Sure. Yeah.
And instead of saying, hey, they just had this event, they told us what they're going to do. Let's try to do that. And maybe we get there in 2025 and we're only a couple years behind them. And then they have all these problems like the union contracts, the dealership hangover, the bureaucracy that they're entrenched in. There's so many factors in the way the OEMs operate that functionally prevent them from competing with Tesla. And they can't like go to Joe Biden and Congress and say, hey, we need you to ditch the unions for us.
Yeah.
They can't go to the states and say, hey, we need to get rid of this dealership model. Because the dealerships and the unions have a lot of political influence. So they all know it's coming. I don't know if the dealers know it's coming. I have a friend who works with dealers. They're like, I think some of them are oblivious to it, but the core of the United Auto Workers, the C-suites at Ford, GM, Daimler, Volkswagen, they all know it's coming. Yeah. They can all see the writing on the wall, and they're just stalling as long as possible. They say nice things about how we're converting to fully electric, and they mean hybrid. They don't really mean fully electric.
Sure.
By 2030, we're going to be fully electric by 2030. Cough, cough, cough. Except for where we can. Yeah. And it's all posturing to satisfy this perception. There's a lot of people who want to believe it, right? There's a lot of people who want to believe that Ford is going to stop producing things that blow smoke in their faces.
Yeah.
Right? That Volkswagen's going to stop producing diesels. Right? There's all these people who want to believe that. And the reality is, just like the cigarette companies didn't want to stop producing cigarettes, Ford, General Motors, Toyota, they don't want to stop producing internal combustion engine vehicles. It's what they're good at.
Yeah.
They want to slow Tesla down as much as possible so they can make as much money as they can and get out of their CEO job just before it all blows up with as much money as they can. That's I'm very cynical.
Sure.
I know.
I take I'm not going to say that that's completely not plausible. I think it is plausible, but to me, I look at it. They still have hope. Most of these CEOs still have hope that they can make an electric vehicle that is profitable and in mass volume at some point in the future to survive as an automaker. I actually think all of them, they sincerely believe that they're starting to see that electric is the future. Tesla has run away with the lead, but they still have a chance at surviving if they could make a compelling electric vehicle that is profitable. And they think they see the $7,500 or $10,000 tax credit as a viable means to make that transition. Meaning, without that money, like they're not profitable making these cars. There's low demand, so they need this demand booster, this interim thing where they can get this subsidy basically and boost the demand. Let them basically put their like key cars, like their trucks and SUV or their whatever, their key cars into electric form at high volume, and then they can start to make some money. Because that's the problem. You can't make profits if you're selling like 50,000 cars, right, a year on your electric platform.
They're losing money on them.
You need to be selling like hundreds of thousands, and that's what the EV tax credit allows. It allows like this interim time to boost the demand to hundreds of thousands, to allow them to make a profit and to survive. And I don't know, I think they look at it as a lifeline personally. I could be wrong, but we'll see in a few months, like what happens.
I guess what I would say is it sounds like your perception of what the OEMs are doing in electric vehicles is the 90th, what I would describe as my 95th percentile case. Like, there's no way that even like Volkswagen's plan for producing batteries is 240 gigawatt hours in 2030, which is, CATL is going to be producing 1.2 terawatt hours in 2026.
Yeah, but you have to think about that. Okay, so take a step back. Background. I've been calling like the whole OEM slow motion train wreck for many, many years since and I completely agree with you. They're so far behind. It's not even funny anymore. It's not even competition. It's like it's a different beast of just trying to survive, right? So I completely get that. But on the flip side, you have this, it's in the game of survival. They will pull the strings with government, and VW will probably ink a deal with CATL even, or other, to get more battery supply. And I actually have some of your cynicism where I do think they will rig the game to survive somehow,
Well, you get an extra $2,500 credit with union labor.
Yeah, right? Exactly.
Yeah. Okay. So the other thing I wanted to ask you about in your spreadsheet was you have this, and I heard you speak about this before. You use EV over EBITDA. I don't think I ever pronounced EBITDA right. Mm-hmm. What is? Can you explain for my audience?
Yeah.
Why you use, and I think the relevant comparison would be to use price earning, net income and price earnings ratio. So could you explain why you like to use EV over EBITDA instead of, and I'm going to ask you more about that, but why you what it means and why you do it?
Yeah. So when evaluating like a company that doesn't have a lot of earnings, sometimes, just using, earnings or net profits is going to give you a very skewed number. Like they're profitable one quarter, not profitable another quarter. You have 1,000 PRV, negative PRV. It's basically a useless metric, right? PRV, especially if they're not making consistent earnings. And so I was searching actually for a metric that would be a little bit more stable and reflect more of like the cash flow of the company versus just earnings. And so when you look at EBITDA, it's basically you take the earnings, but it's earnings before interest, taxes, depreciation, and amortization. So interest and taxes, that's just all your debt payments and all that other stuff. But then you've got this depreciation amortization thing where Tesla has invested a ton of money in their gigafactories and all their equipment. And for every car they produce, they're depreciating and amortizing some of those factories and those equipment for every car. The problem with that, with the current financial statements, is when you depreciate that, it's actually kind of hurting your income statement because you depreciate that. It's not an actual cost that quarter that's going into making that car. It was spent a while back. It was like, the factory, but yet you can't claim that it basically costs more to make the car than what it really does that quarter. And so it takes away from your earnings. And so Tesla's earnings, if they didn't have to depreciate their old factories and equipment, it would be much higher, right? And so I think earnings that you don't have to add that depreciation into it, I think it's more reflective of kind of Tesla's state. And then you also have with Tesla this whole thing of with their adjusted EBITDA, they actually removed the stock-based compensation too. So there's a few things where I'm like, I think with a growth company that is having substantial cash flow because the income statement is kind of rigged against it because you have to depreciate all this stuff and the cost of cars is even maybe lower than what the income statement says. But if you show it more, I guess, transparently, like how much cash the company is really bringing in, you can make a multiple off of that cash flow more easily. And so that's basically the gist of EBITDA, right? So let's look at the cash flow kind of, it's not a perfect metric by any means, but I think it's a much better metric than net profit. And then you do a multiple off of that and you can come up with, I think, a much more consistent valuation kind of, historically, but also going forward.
Yeah, and I think when you described it in whatever video you did fairly recently,
Mhm.
you mentioned Amazon. And
Yeah.
I bought Amazon in 2013 at $261 a share when the PE ratio, I think, was negative.
Hmm.
Because price earnings ratio, like you said, fluctuates wildly, where the EBITDA is more stable and the EV over EBITDA is more stable. I wasn't using your model.
Yeah.
I just realized I was addicted to Amazon Prime. And I thought, other people are going to get addicted to this.
Yeah.
And I
So
bought it.
yeah. So one example of like, for example, using EBITDA versus net profit. Let's say take Tesla last quarter. You had their profit, let's say their GAAP profit, right? But then if you add back depreciation amortization, maybe it's like, I don't know, it's probably like 600 million. Then you add their income and taxes back, and then you know, add back stock-based compensation, you get kind of like a number that's more reflective of how much cash they're generating for that quarter. Of course, they're using some of that cash to invest back into factories and equipment. But still, if you take that number, I think it was like $2.4 billion just last quarter. That's like a $10 billion run rate, which is just going to grow, probably double in the next year. And if you take that number, you get and you do a multiple, you're getting, I think, closer to it's basically a tool you could have used to evaluate Amazon, 5, 10 years
Yeah.
ago. And it would have made sense that Amazon is a good deal by using EBITDA and not like a P over E, I think.
So, side note, I just want to ask you, I bought Amazon in
Yeah.
2013 and I regard it as my biggest investing mistake ever.
Yeah.
Do you know why?
Yeah. Because you didn't buy more.
I didn't buy more. It's like
Yeah.
I'm still like that's why I bought so much Tesla stock.
Yeah.
Was when I saw it, I realized, well, when I saw it with Amazon, I didn't jump enough. I bought a fair amount. I had kind of limited myself to like 5% of my portfolio in one stock,
Yeah.
right? So I didn't go like crazy
Mm,
buying Amazon stock. And I saw it, like I could see that it was going to go. But I just like I had this old investing strategy. And
yeah.
then after that started to go crazy, when 2016 hit and I really got Tesla, I
Yeah.
just started buying and buying and buying. And then like I haven't stopped. Like if I have free cash, I buy more Tesla.
Yeah.
Um,
Yeah.
so but there's this contrast. You use what's EV over EBITDA? What's the EV part?
Yeah. So EV is like enterprise value.
Enterprise value. Okay.
Yeah. And
So so when you compare that to like I feel like the standard Wall Street way of valuing a company is price earnings ratio,
yeah.
right? We look at the market cap of the company or and then we compare it to the earnings, right?
Mhm.
And I think that's net income. A
Sure.
gap non-GAAP net income, if I've got it right, is what they use.
Mhm.
So my question for you about this is, as I look at your sheet, Tesla is growing to being consistently profitable on a net income basis. So is there a point where it would make sense to switch from enterprise value over EBITDA to price earnings ratio
Yeah.
as
I
a
think,
as a better way of valuing the company?
yeah. So I think at a certain point, um, the depreciation, amortization, the other expenses, even stock-based compensation, it doesn't play as big of a role in the cash you generate. And at that point, it becomes like kind of moot, where you could use PRE, net earnings, because it's more reflective of the cash generation, potential of the business. And so it's just, I think, an issue of maturity. It just takes time to get to this place where your earnings are like 80-90% like your your profit, and you've got depreciation, some other stuff, and taxes, and all that other stuff, which doesn't mean as much, right? And so yeah, at a certain point, yeah, I think Tesla will mature into kind of more of a stable PRE company. It could take a while though, because they're growing still pretty fast. It's interesting also in the 2018 CEO compensation plan, Elon Musk, I think he had a big part in drafting that plan, but it's really,
course.
yeah, like the figures are really heavily based on EBITDA. Like that's like one of the key milestones. It's like, market cap, but
Right.
EBITDA too. And I think Elon and the board picked that up early. They're like, this is a good metric,
It's a more stable
yeah,
value. It's a more stable number to look at than net income because net income's all over the place.
exactly.
Yeah. No, and I have noticed that and actually I kind of wonder, like I think he's gonna complete the stock-based compensation by the end of next year, if not sooner. I think the EBIT. I think the EBITDA is is it? I don't know if it's revenue or EBITDA that's like going to be the final holdup.
Yeah. I think it's pretty close. I was thinking the next 2 years he would probably have it finished, but we'll see. Yeah, definitely.
Yeah.
It's coming soon.
And then I sort of wonder when he finishes the stock-based compensation plan, do they have to negotiate a new stock-based compensation plan for him? I think they do.
Yeah, definitely. I think they do. Yeah. Yeah.
Okay. All right. So you had this other model. It's like really simplistic model.
Yeah.
Where you had 2025 and you went a little ahead of yourself and you said 5 million vehicles sold, and you had operating profit of $10,000 a vehicle, so operating profit is different than, that's like a 20% margin, but that's not gross margin, or what is the?
Yeah. So there's
Oh, sorry, because you have your average selling price is lower, so it's not really 20%.
Yeah. So when you talk about profit, there's really three types of profit. So you have gross profit, which is before your operating expenses, and then you have operating profit, which you minus your operating expenses, and then net profit is after your interest and taxes and stuff.
And depreciation and amortization, right?
Actually, that goes into your gross profit.
It does. Okay.
Yeah, depreciation as cost of goods. But I use operating profit because that's the thing. Net profit is tricky because you're adding taxes and interest and all this stuff. It could fluctuate. So operating profit, to me, I kind of lean toward, especially for a company that's still growing like Tesla. But yeah, and sometimes you just give a multiple off of the operating profit as a valuation type of model. And so that's kind of that model, which is $10,000 per car. And the way I get that is if you factor in FSD, here's the problem is FSD likely will be mostly subscriptions, at a certain point. But I don't, rather than make it a new line item and try to make it complicated, I say, okay, let's just front run it. Let's just do a discounted kind of cash flow type of simplistic model where, let's say if FSD is $200 a month, and let's say over 5 years, that's like, $12,000. Then let's just say we can factor it into the cost of the vehicle for valuation purposes. So let's say maybe $7,000 or $8,000, just go into as profit for the car, and then they make another $2,000 or $3,000 off of the car itself. So you'd have $10,000 of profit. Most of that is FSD related, whether it's the option up front or the monthly payments. And Tesla can do that. Then you just make a simple multiple off of that profit. So you just have 5 million cars times $10,000, dollars per car, and just do a simple 50 or 60 multiple, because Amazon right now is trading at a 60 multiple of operating profit. So if you do a 50 or 60 multiple off of that, you will get, close to $3 trillion, right?
So robotaxis, you're not accounting for robotaxi anywhere through 2025. Am I correct?
Yeah. I mean, again, it's not that I don't want to, but I feel like that's going to add complexity, which if robotaxi could provide like 50% of revenue and valuation by that time, 2025, then I would definitely try to incorporate it in. But I'm kind of like saying, okay, anything like less than 10 or 20% in its parts. It's like Tesla Energy, let's throw out for a second. Robotaxi, let's throw out for a second. And you're going to get a lot of the benefit of robotaxi already in that FSD option, the uptake and the monthly subscription. So I'm like, that's enough for now. Sure, you can add 10 or 20% more or something by that time. You take out insurance, any other thing, and just stick to what I think is the core product. Can that core product, which is like 60 or 70 or 80% of the revenue, can you justify the full valuation just off of that core product? That's kind of the valuation exercise.
Well, I guess the way I see it going is once they crack FSD, which I think is sometime at either end of this year or sometime next year, when they really crack it and it's really just genuinely better than human, it doesn't make sense to me that you wouldn't go really heavy into robotaxi, and robotaxi actually becomes the core product or the core service.
Yeah.
And
the
profit story with robotaxi is insane.
Yeah. No, I've modeled it too in a separate thing, and it's crazy. I've kind of tapered my views of timeline with robotaxi after getting FSD myself. Like I was really optimistically positive on.
Not beta though, right?
Yeah, beta. Yeah.
Oh, you're beta. You're
Yeah,
beta
yeah. So
9.2 or whatever.
yeah,
Yeah.
9.2. So I've had the beta for a couple months. And before having the beta, I was like, oh my gosh, we're at the crux. Like we're almost there, right? You just like some fine tweaks and we got wide release and
Yeah.
robotaxi. But after using it a lot, I realized driving is just so stinking hard. It's really, really
Yeah.
hard. And it's gonna be a while, even until my wife is gonna feel comfortable in the passenger seat on FSD. Like right now, I turn it on and we drive, and she's just is not happy. Like in terms of what happens at different times, right? And I'm just saying, like, if that's the state of FSD right now, in some ways it is impressive. Like sometimes I'm just like blown away. I'm like, oh my gosh, that was amazing what it did. But like it just does these like things that isn't supposed to do at certain times.
Right.
And it's gonna and to overcome that, like when I analyze like why it does what it does, and sometimes I'll email James Dalma like a clip and I go
Yeah.
explain what's going on here, and he explains it. I'm like, oh wow, that's a tough one. Like this is this is not an easy one, you know. Like there are a lot of hard problems that FSD is trying to solve. So I just think that robotaxi, I'm bullish long term. I think that it could be a slow ramp. Like maybe let's say in 2 or 3 years they start. Maybe in 1.5 years, who knows? They start a jurisdiction. Let's say Chandler or something, limited rollout. It's gonna take a few years even to get to a place of, I think, greater adoption. But ultimately, like I'm bullish. Like ultimately, like this thing is like gonna be a 15-year runway of massive just revenue /
Okay.
valuation for Tesla going forward.
Okay. Now, I didn't tell you about this beforehand, so
Yeah.
if you don't want to talk about any of these, I just wanted to ask you because I think I pretty much covered your.
Yeah.
Is there anything else about these models that you want to talk about before I move on to something else?
No, I think generally like my models are not necessarily to prove a valuation. It's just simply to say, hey, ARK thinks their base case is 3,000. Elon agrees with it. What's this like a simple way we can try to understand that could happen? Obviously,
Right.
everyone has their own valuation models. Everyone will disagree, but what's the kind of a super simple just justification of how that might happen? It's not necessarily. I look at it as much more multi-pronged, multifaceted. There's so many more probabilities and possibilities out there. So it's just a fun exercise. But I think definitely a bullish one in my opinion, because if you can justify a $3,000 price target in 4 years, I mean that's actually pretty ambitious, I think.
Yeah. So, well, let me ask you one more thing about this. If you're bullish long run, like let's say 2030, you think robotaxi will definitely or
Yeah,
high likelihood will be operating and generating huge amounts of revenue and profit.
yeah,
Do you ever try to model that and then think back, okay, if I think their profits in 2030 are going to be this ridiculous number,
yeah,
and that's going to lead to this market cap in 2030, what would I pay in 2021 for something that's going to be worth that much in 2030? Because that's one
yeah,
of the ways I think. When I think about it
exactly.
that way, I'm like, $2,500 a share today is cheap
Yeah,
for where I think it's going to be in 2030.
yeah,
You know what I mean? If you're looking at it, what you're doing here in your model, what I do in
yeah,
a lot of my models is here's a fundamental analysis of where I think it will be in year X. And the one thing I do is if I come up with a big number in year X, like say 20, my number for 2026 is a $20 trillion market cap, which
yeah.
is aggressive to be kind.
Sure.
But if I believe that it's going to be worth $20,000 a share in 2026, like, well, what would I pay today for something that'll be worth $20,000 in 5 years? And the answer is a heck of a lot, right?
Uh,
A lot more than $750 a share. Honestly, like 5,000 a share is probably low for something you think is going to be worth $20,000 a share in 2026. Is it crazy? I feel like I don't see a lot of people who do this kind of analysis
yeah,
taking that step, that
yeah,
last step of saying, okay, if I think it's going to be here in that year, what would I pay for it now? I feel like no one ever talks about it that way.
yeah, yeah. No, I mean, okay. So okay, I love that approach, and that plays a huge part of my own investment philosophy because when I look at 2030, like what I'm really looking for, which I don't really tell a lot of people, because I think a lot of times it's hard to grasp, which is I'm looking for 2030 to 2040. Like, how confident am I that the next decade is going to be like crazy good, right? But because it's so far in the future, most people, they make fun of it, they minimize it, they just like, it's hard to even fathom that. But when, and so I look at it as like this option call that I have on the company, and I'm like super confident Tesla is going to solve FSD by 2030. You know, they're going to make a ton of money, and they're going to have a whole decade of just growth like crazy, and it's going to surprise everybody. And but the problem is when if I want to incorporate that into a valuation model for public consumption, it requires this unnecessary amount of justification and defending these scenarios 10 years or 15 years down the road. It makes it just seem so ridiculous in a sense, right? And in that way, I feel like I'd rather, for a simple valuation model, just do something that people believe in more, like vehicles and FSD or whatever. But personally, that actually plays a huge role. Like the robotaxi story, the profits, and the 15 to 20 year massive runway, and how I think that option call, which I think is very high likelihood of coming to fruition, how I'm getting it for free almost, you know, and I value that though very highly though.
I like what you said there, because I've done my models out to 2030, and I don't think I can conceive of where we'll be in 2035. It's just so, like, number one, I think, let me ask you this question. I think Elon retires from Tesla. Not, you know, he'll still own stock, he'll still be chairman or whatever, or involved. But I think Elon basically stops putting a lot of time into Tesla in about 5 years, and turns his time, because his real dream is SpaceX and maybe Neuralink. That those, his ability, I see, like, I feel like a lot of what Tesla's doing is going to be either a solved problem, or he's going to have enough faith in the team at Tesla that they can take care of it, that he doesn't have to spend 60% of his time at Tesla. I don't know if it's 60, maybe it's 40, but it's probably the company he spends the most time at. He's putting a lot of time into SpaceX right now as well. But I think he really wants to go all in on SpaceX with some significant contribution to Neuralink as well. And I don't know if you ever heard him talk about, somebody asked him, like, he said, like, he puts 5% of his brain cycles into Neuralink and 1% into Boring Company, and the rest is SpaceX and Tesla. And I think he's going to want to, he has a tremendous mind, and it's like, where does he put that thinking to? And, you know, Mars is it. I think Mars is much more important to him than Tesla. And I think Neuralink may actually be more important to him than Tesla. Yeah,
I mean, so I think maybe though, Tesla AI Day might be changing things, and the Tesla bot. Because if you think of the ramifications of a Tesla bot, it's actually, I think, crazier than most people realize. Because if you think about the race to AGI, right, to singularity, whatever some people assert, there are like these different paths, and one path is like the whole Google and Facebook and DeepMind, all these others that are doing mostly an online path to artificial intelligence. And that online path is more like online activity and, you know, language online and just different things like that. What Tesla is doing, which is like this second path, which is catching people, I think, kind of off guarded, is they're taking this real world, physical kind of hardware, software approach to AI, which these other companies aren't equipped to do. You know, they're not set up to do that. But the big bet that Tesla is making, which I don't even know, I think Elon is holding back a lot on what he's thinking, but I think he thinks that Tesla has a good shot at becoming the preeminent AI company in 10 years. And not just that, but that Tesla in 10 years will be at the forefront of actually the company most likely to solve AGI, even more than Google or others. And the reason being is once you start interacting in the real physical world, you start to interact with humans on a much more existential, like much more deeper, intimate level than on a computer screen. Like you could put on goggles or whatever, but that's still like, it's so artificial, and how you interact with the internet or with the computer. When you have a almost like this being, right? This object next to you, talking with you all day, walking with you, helping you, opening stuff, doing stuff for you as almost like this friendship relationship, this completely redefines the human to computer interaction world. And it opens up a massive amount of data collection that these online companies don't have. Like the online companies only have online activity. They don't have real world activity and actual like relational, data. And by doing that, I think Tesla has a very good chance of being at the forefront of solving AGI. And then this bot, if you think about the bot, how many iterations are possible with this bot in the future? It's like endless. Think about it. In 50 or 100 years, are they still going to be improving on this bot or not? Obviously they are, right?
Yeah.
Like, it's just the most mind-boggling like project ever, I think, in terms of its potential. There's no cap to its potential. And also economically wise, if you think about the bot probably has the biggest economic potential of any single product ever invented in the history of the world, because it's disrupting human labor and all of human labor, because it's a generalized artificial intelligence vision. Right now it's not, but it's going to get more and more generalized and capable to do almost anything that a human can do physically, but also eventually like mental capacity wise too. So we're talking about the biggest disruptive product ever, probably ever, that will be invented too. But I just think, if I'm Elon Musk, like you want to be kind of the steward, the shepherd, the controller of that destiny of Tesla Bot. And so there's different ways, but one way is maybe he could do chairman of the board and chief product officer, for indefinitely. I think that's definitely one option. CEO, he might get tired of it, and SpaceX is important. So I agree with you in that sense, that he might shift focus. But the Tesla Bot though, man, I mean, that is out of left field in terms of its magnitude. And I think it's going to occupy Elon Musk's attention for a decent while.
Yeah, I'm just going to suggest for you, if you haven't seen it, and for the audience, there's a great interview that Lex Friedman did with a guy named Jeff Hawkins. Jeff Hawkins has a model of how the human brain works, and talked about that in context of how artificial intelligence might work. And I think some of that touches on what you're talking about. So I want to ask you about 5 early stage or startup companies. I don't know if you have any opinion on them at all. If you don't want to talk about them, we'll move on to the next one. But Are you familiar with Aptera?
Aptera, is it EV?
It's like the solar car.
Yeah,
the solar EV.
Yeah. I mean, I haven't looked into it deeply, just passing. And I mean, I'm not. It's just what Elon was saying with mass production of cars. I'm just, you have to really like prove it's like sometimes like to have bias is a killer, to have a bias, because you can miss out. But sometimes with like something as hard as mass producing cars, like, I don't know, Aptera has to prove itself like in some mega way. Yeah.
No, because I'm working on a video now. They have sort of like a funding round happening right now.
Yeah.
But it's not like a venture funding round. And it's not a Regulation C crowdfunding round. It's like this Regulation A crowdfunding round that I've never seen before. And I'm looking through their financials, and I'm a little bit skeptical.
Sure.
Given that they've been through bankruptcy once, I'm a little bit skeptical. Arcimoto, do you have any thoughts on Arcimoto?
Yeah, I mean, I love the CEO, Mark. I've had him on my channel, and I think they've got a great vision. They're going to benefit, I think, from this EV tax credit. Because they don't get the full 7,500, but they get a partial, and that's going to be huge. That'll be like a big lifeline and just boost to their company. But personally, I'm not invested in Arcimoto. I'm kind of more like, I like the generational companies, and I'm not putting Arcimoto in that category. I think you need someone like an Elon Musk-ish type of ambition and scope and product excellence that is kind of unique. Yeah.
I mean, my take on Arcimoto in particular would be number one. A couple of years ago I bought a Volkswagen Passat for $18,000, and it carries 5 people, has a big trunk, and will go like 600 or 700 miles on the highway on one tank. Arcimoto is like, I think like 100 miles of range. It's fun. There's this thing with a lot of vehicles where there's like this focus on making it fun to drive. And I feel like the battery day vehicle is going to radically change everything, because if you're not driving, you don't want it to be fun to drive. You want it to be boring to ride.
Yeah.
Right. You know, unless you're on a roller coaster, you don't usually like your rides to be exciting. If you get in an Uber, you don't get out of an Uber and tell somebody, wow, that was the most exciting Uber ride I ever had. It's like, that was the most terrifying Uber ride I ever had.
Yeah.
Do you have any thoughts on Lucid Motors?
Lucid, I have mixed thoughts actually. I think they're a buyout candidate. You know, I think that I think, you know, if Apple wanted to get into the EV game, you know, Lucid might be a candidate. But on its own, it's like I think some of their tech is legit. Actually, I think they have some engineering prowess. But I think the gist of it though is they're copying Tesla by going high end and all this stuff. And I just don't think you can copy a generational company when they've saturated that market. Like, you already have the Model S in that premium Model X, and then you're trying to go into that market after they've dominated that market, right? It's like crazy. Like, you need to find an innovative way to establish a market beachhead and then grow that beachhead over time. You can't go head to head with the Model S. It's just like, I don't know, for your first product of all, you know?
Well, I think their target was really the S-Class Mercedes rather than Tesla Model S. They were aiming for, they call it like post-luxury.
Yeah.
This is one of those things where I listen to the presentation and I hear the word post-luxury and I'm just like, this is marketing baloney.
Yeah. I mean, that's the thing. The market for over $100,000, you know, car, you know, like Tesla is actually saturating or actually, you know, cannibalizing some of that market too, right?
Yeah.
So, yeah, I mean, yeah, I don't have high hopes, but, you know, if they're a buyout candidate, maybe, you know, someone picks them up.
Okay. Are you familiar with Boxabl?
Yeah, actually. Yeah.
Have you talked to them or do you have any thoughts on them?
Not really. So, yeah, I don't know. I'm a little bit skeptical, to be honest. Yeah, I mean, I've watched some videos. I mean, this is the modular housing, right?
Yeah, yes. It's there's this market in California. It's called ADUs, like associated dwelling unit. And there's some special exception where you get past zoning laws and you could put a 400 square foot building in your backyard, like a residential building in your backyard, because I guess California's a housing shortage. And they're trying to hit that market with a building that they can basically build in the factory, fold up, and then it's easier to get it from the factory to the site if you don't have to use an oversized vehicle.
Yeah.
They save a lot of money on the transportation.
Yeah, I watched several of their videos and their founder interviews, and what I'm looking for when I look at a company like Boxabl is I'm looking at if I can gauge the level of clear thinking, strategy, and engineering that the team has. And when I was looking at their stuff, I'm like, you know, these guys are clever and somewhat smart, but I don't know if they really have that generational clarity and product excellence. Right. And I think they've only made, a few?
3.
Yeah, a few houses right now.
They claim to have made 3. I'm not convinced that they haven't made. They've only made. I sometimes think they've only made 2, or maybe they made 3, but one of them's gone, and they've got 2 left.
And it's how long have they been around for to just make 3, or whatever?
Around 5 years, yeah.
Yeah, I mean, does that make sense to you? You would spend 5 years to make 3 things? I mean, I don't know.
No, I mean, I feel that way about Lucid. I mean, Lucid's been around. I don't know. It's 7 or 8 years or something.
Yeah.
All right, and Rivian. Do you have any thoughts on Rivian? They're supposedly getting ready to do an IPO.
Yeah. I mean, Rivian. I want to actually test drive their truck and give it a shot with an open mind. I think it's a great thing that they could actually make a truck that people want. Some people actually are ordering it over the Cybertruck or Model X. I mean, that's actually you've got to give some props for that, and if they can deliver it, and if the people who are taking delivery actually love it, then you've got to have some open mind with Rivian. I think. I also think they could be a possible Amazon buyout target. If Amazon wants to get into EVs and autonomous driving, so interesting, definitely a company to watch out for.
Do you think the $80 billion valuation that was floated makes any sense at all?
Yeah, I mean, I'm biased, of course, because I think they have an uphill battle, and Tesla just 2 years ago was 40-50 billion dollars in valuation.
Right.
It's sad because you could have gotten Tesla instead of Rivian, but for that price, and now you're stuck with Rivian. What a sad place to be in,
I actually have a T-shirt that says Tesla is the next Tesla.
Yeah,
and
yeah.
I feel like everyone's looking for the next Tesla. I'm like, no, Tesla is the next Tesla. You don't need to look somewhere else for it. And so the reason I brought those up, in particular, I'm looking at Aptera now, and I looked at Boxabl before. Boxabl did a crowdfunding round. I almost got sick to my stomach when I saw this.
Yeah.
They had a total combined capital investment, including the crowdfunding round, which is $5 million, of $15 million. So the crowdfunding round contributed 1/3 of the capital of the company, and they got 2% of ownership. And I found that really disturbing, that you're chipping in 1/3 of. And I wonder, do people actually read the prospectus, the circular? So I was reading Aptera right now. Aptera is doing a funding round where I think they're trying to raise $75 million. And I think that's more money. They raised a lot of money and then went bankrupt, and they started over. Mm-hmm. And I'm looking at their financial statements, and they have I don't know, $500,000. I'm making up the numbers, but it's in the ballpark of $500,000 in cash and $600,000 in assets. And they got 34 people on the payroll. It's this sounds like a company that's ready to go under. Mm-hmm. And they don't. I don't think they built one prototype that I've seen.
Yeah.
So when I look at there's this idea people have that I'm going to get in on a company early, and I'm going to 10x or 100x because I get in early. And it's well, yeah, but this is before they have anything. And you're not getting what I would call a fair price for getting in that early. If you're buying Rivian now at $80 billion valuation, what's the upside for Rivian?
Yeah.
Where does Rivian have the potential to go to $800 billion in market cap based on selling these pickups and SUVs? Yeah. I don't get how. I haven't seen. I think the document they filed with the SEC was confidential, so we don't know what their presentation is going to be for that IPO. But it's I feel like a lot of investors are so hungry to get the next Tesla that they're not judging what I'm investing in here.
Yeah, I think also there's a general kind of enthusiasm in the markets, in the private markets, to speculate and invest in startups and new things. And I think you actually see a big phenomenon with angel investing. So you've got these things called syndicates that different groups like AngelList and others allow people to join. And so now you have, as long as you're an accredited investor, you can start investing, sums of money and pool them together to make these angel investments. And it's becoming something that I think people have been wanting to do, but it's becoming kind of it's this whole own movement right now, just speculating on startups and new companies. I think that's part of it. I don't think it's just Tesla finding next Tesla. There's a lot of companies that get high valuations. Even in the startup world, I've been following kind of for many years, and before you could do a series, the standard 10 years ago was kind of Series A at $10 million,
Yeah.
But now it's you can't do that anymore. There's too much demand. You do a pre-seed or, a seed, and then you do a pre-seed sometimes, or then you do a seed round and then a Series A for multiple times that. And it's the demand. There's so much money chasing not enough opportunities out there.
Right.
Yeah, it's part of the bigger picture.
Okay, so have you heard about my startup idea?
No, what is it?
Okay, so I'm actually spending money on this idea. I've actually started paying people to help me with this.
Yeah.
And I'm going to tell you right now, before you tell me it's stupid, I think there's a 95% chance it's stupid. And I want to preface this by saying, you talk about a generational company.
Yeah.
And I don't think what I'm doing is a generational company. I think there's a different way of looking at things.
Yeah.
I mean, I think the generational company is important.
Yeah.
I think, uh, the PC was this generational change. And then what happens is I describe it like there's a wave. So there's the personal computer wave. And then Microsoft, a lot of different things spin off the wave, like spreadsheets and video games and personal video games at home. And Microsoft is like riding this wave, and all of a sudden becomes its own wave, right? And then Google comes along, and we have search. Search Facebook comes along, and it creates social media. There's these whole industries that are created that did. I'm a YouTuber. We're YouTubers.
Sure.
We're riding a wave, right? I mean, I'm guessing you make some money on your YouTube channel. I make some money on my YouTube channel, right? We're riding a wave, the social media wave, essentially. And I think that the robo-taxi is going to be a wave. So my idea is to create, and I have this vision. If you remember Autonomy Day, Elon said that 80% of travel, like in cars, was single passenger going from point A to point B. So I just formulated in my mind right that day, well, then the optimal robo-taxi would be a single passenger vehicle. And I've been thinking about it, and I've been making videos about the concept since Autonomy Day. Maybe not right. Somewhere along, I started making videos on that topic or talking about that topic in my other videos. And I finally decided, no one else is. I talked to Drew Baglino at Battery Day at Plaid, and he actually didn't think it was. He thought the narrowness of the vehicle might have some use, but he didn't see something they were going. I talked to another high-ranking person at Tesla, not as high as Drew, about the idea, and he told me that's not in Tesla's roadmap. So I decided I'm going to create a single passenger EV, self-driving, like designed for. I'm not creating the self-driving software. I'm not creating the robo-taxi network or Uber or Lyft software to coordinate the rides. It's just no one is building the car. And I figure, well, if I start building the car, I'll be riding the robo-taxi wave. I don't know how I'm riding the robo-taxi wave yet, but I think I can have the hardware ready for when the robo-taxi network goes live. And then I can pitch it to Elon or in Tesla, or I can pitch it to Waymo, whoever has like it working. Maybe it's, Comma, maybe it's Zoox, whoever really cracks self-drive. I think it's going to be Tesla, but I think others may come along after Tesla. And then and it's not even for like US roads. It's like for, and like some key details, sorry. So it's really lightweight, obviously.
Yeah.
It's not designed, there's no steering wheel, there's no pedals, there's no doors and windows. Like if you think about the structure, if you ever look at a car, you think about how much weight goes into the structure of the car to support having doors and windows, and what effect they have on aerodynamics. And if you just say, I'm going to make this really smooth surface, we don't need doors and windows, maybe it'll have see-through plastic, maybe it'll be opaque and we'll have a screen in there or something. But it's designed to be ridden, not driven. And it's like everyone I talked about, it doesn't get, no, it's not fun to drive. It's boring to ride in. And so I'm paying some engineers right now to give me some chassis designs. And and then powertrain design will be next. And then I've got a guy locally I think I can rely on, not sure, but I'll find somebody to build me an alpha prototype. And my whole thinking is like the longer I can self-fund this, the better. So I'm confident I can self-fund my alpha prototype easily. And the alpha prototype is just, it moves and it looks like it, right? It doesn't go 70 miles an hour. It doesn't have great range. It just works. And then if I can continue self-funding, I spend a lot more money doing a beta prototype, like engineering, like pay full-time engineers now to really engineer the heck out of this. And let's get a really good beta prototype. And somewhere in there, I go crowdfunding. And I raise $5 million. And I try to be more fair to the investors than Boxabl was. Right. I just that really, it like burned me a little bit.
Sure.
Does this sound crazy? I mean, I know it's not a generational company. It doesn't sound like something you would invest in because it's not generational. It's like I want to be one of the little guys riding the wave.
Yeah. No, I'm not saying actually that I don't invest or I'm not interested in non-generational companies. It's just generational companies have like this special, you know, advantage type
Right.
of category. But yeah, no, there's, you know, definitely tremendous opportunities everywhere. My question, okay, so is this like a go-kart type of vehicle
It's
or,
roughly the size of a go-kart, 3 feet wide, 7 or 8 feet long.
okay, I mean, just a little higher off the ground. So
Um,
then a go-kart,
I'm using
like,
bigger wheels,
okay,
so it will ride somewhat higher off the ground. Yeah, and I've
yeah,
got like crazy ideas, like no brakes, no suspension, right? You know,
yeah.
Elon's thesis, the best part is no part,
And
and you.
is this supposed to go on regular roads?
My target markets for this are poor countries where
Hmm.
people are riding around on mopeds or
Got it.
rickshaws or tuk-tuks or whatever. I don't really, I haven't, I've never been in a country that poor that I'm targeting. I just like have some idea about them. I've been in the Caribbean, which I kind of think my first market might be like the Dominican Republic or the Bahamas
Huh.
because they have really high traffic fatality rates. And if I can make a safe way to get the drunk drivers home,
Uh-huh.
and so the drunk drivers don't hit pedestrians. If my 600-pound vehicle, including passenger, hits a pedestrian, it's a lot less devastating than if a 4,000-pound car hits a pedestrian,
Yeah.
right? So
Yeah.
it's can I find a Caribbean country that's willing to let me try out 100 of them?
Yeah.
And the
Yeah.
beauty is if I do it right, it costs so little to make them. So if, let's say I can build them for $2,000,
Yeah.
then 100 of them only cost me $200,000, and the $5 million crowdfunding can go a long way. Right. And
Yeah.
then, ultimately, like I think if you follow ARK Invest, they think the cost of a robotaxi ride gets down to maybe 25 cents a mile.
Yeah.
And I think I could, like my aspirational goal is a penny a mile for the owner of the
Hmm.
vehicle. And then you can sell rides for like 3, 4, 5 cents a mile.
Yeah.
And when you talk about that guy in India who his family lives on $2,000 a year, if you can save that guy $20 on a 100-mile ride,
Yeah.
that's like you and I would take the more expensive ride because we don't want to ride in this little tiny thing. We
Yeah.
would rather sit in the back of a Tesla Model 3 than ride in that thing that he's got.
Yeah.
But that guy saving $20 to him is a really, really big deal. And he's used to riding in crappy vehicles. So this will be an upgrade from what he's used to.
Yeah. I mean,
So
yeah, I get it. I'm starting to get what you're saying. I mean, actually, first off, like, I think the ambition is fantastic. Like, just, you'll obviously learn a lot by doing, what you do. I think a lot of people, when they get more resources, they opt to be so risk adverse that they don't really go for it and take advantage of opportunities where they can learn a ton. And, they just like kind of disqualify themselves, by just, I don't know, being so scared, to use money. But yeah, I think, just the ambition and the willingness to use money, I mean, that's fantastic. So one interesting angle would be kind of the combination of the electric scooter market. So, like the whole
yes,
scooter market.
that's probably where I'm getting my motor and battery.
Yeah.
The powertrain idea is probably going to be close to the scooter market or the electric motorcycle market.
Exactly.
Somewhere in there.
Yeah. So you have if you think of the electric scooter market, but which is completely dominated by Chinese manufacturers, right? Everything is made out there. And part of it is they have such an amazing ecosystem of manufacturing, design, machinery, competency, and product and costs, suppliers, and everything. And so those companies are going to be like at the forefront of copying anything.
That's my
everything
expectation, actually.
of
I don't expect to dominate the market because as soon as I have something
exactly
that works,
yeah
there'll be 100 companies in China making them.
exactly right. They would just make it look similar and cheaper, right, and everything.
No, but that's premised on the idea that it's a product that you're selling to a customer, where
Yeah.
my picture of it is I'm actually the fleet owner
Yeah.
and I'm selling the rides. And the
Sure.
market is so big that even if China produces 10 times as many as I do, there's still enough market for me to be successful. And really my goal,
Yeah.
it's part, actually, I want to touch on one thing. When you said that about you make money and then you just sit back and don't do anything, I have this saying I've been saying for a while that we should be like Elon. Not
Yeah.
that we're going to be Elon,
Yeah.
but if we all strive to be like Elon. So Elon made, I don't know, $200 million on PayPal.
Mm-hmm.
And he didn't buy a yacht and sit in the back of the yacht sipping drinks. He didn't blow it on hookers and coke, right? He actually went and invested it in like another venture.
Mm-hmm.
And I'm like, I don't have Elon money. Mm-hmm. I'm not aspiring to be as good as Elon, but could I be 1/100th of an Elon?
Sure.
Right? And if 1,000 of us become 1/100th of an Elon each, then we've got 10 Elons.
Mm-hmm.
So,
yeah,
yeah,
I totally think similar in some ways where I'm like, with more resources, I'm like, oh man, like Elon already showed he did an interesting thing where he went for bigger, more audacious goals that had a bigger impact to the future of humanity. Like, so
right.
he basically took whatever he made and he just reinvested it into things that he wasn't able to do before because he didn't have the resources. But now, he has more resources. He's just doubling up for more important and significant goals. And so that kind of haunts me sometimes where I'm like, oh, like this just gives me more opportunity, perhaps even responsibility to use, some of these resources to actually make big bets, right? That actually impact, humanity and bigger goals. So no, yeah, I totally get that.
No, and there's sort of a mission in my mind, which is it's not so much that I want to make $1 billion. I wouldn't mind, right? But that's not necessarily the goal. The mission in my mind is Tesla is accelerating the transition to sustainable energy and sustainable transportation, but they're doing it from the top down.
Yeah.
And I don't see anybody working to like with the robo-taxi or whatever, to reach the world's poor. Right. And they're driving around in these mopeds that are probably 2-cycle engines or whatever you call it, these engines that are really messy, and they're riding around in a lot of diesel vehicles that are really bad for the environment. Can I accelerate, whether I profit from it or not, immensely, can I help accelerate the transition at that level so that we get the world's poor and not sorry, on the one hand, give them access to cleaner transportation, but give them access to more convenient and lower cost transportation. Because if I can save that guy in India $20 one day,
Yeah.
it means a lot to him and to his family. And, I feel like I love what Tesla's doing. I'm a huge investor. I'm a huge believer. But it's like it's going to take too long to get to the world's poor. And maybe I can accelerate that. And, I'm not as much of I'm an environmentalist a little bit. I'm particularly concerned about like diesel emissions, coal emissions, whatever, the pollution that like messes with our breathing. But it's really just like, can I make life better for poor people?
Yeah, I think actually, like I'd be 90% confident that Tesla does release something like that within 10 years.
They literally told me it's not. I think the
No,
minibus. I think the minibus is in their roadmap.
No. Okay, so with Tesla, you can't ask like the people under Elon Musk about.
Oh, yeah, we
stuff.
don't know what he's planning, right?
No, that's what I'm saying. They don't like the people under him don't understand. They're not the best indicators of the future products 5 or 10 years down the road. If you were to ask, any of, his team like 2 years ago, if Tesla was going to do humanoid robot, they'd probably laugh at you. They'd be like, ha ha ha. What are you talking about? But yeah, if you think about it, like what's the biggest problem of an autonomous single passenger vehicle? It's got to be the software. It's the AI. That's the
right. And my plan is just to buy that.
Yeah, but here's the thing. It's so hard to get that. And I don't even know if there's going to be really a good second place solution to be honest. I think Tesla is
I think my first plan is to buy it from Tesla.
Yeah, but I'm just saying that is over like 98% of the problem. I think it's the AI. The other, less than 5% is just making the super simple vehicle. And I think Tesla will make it. I mean, once they solve the AI problem, then they just think about how easy it is for Tesla just to pull together, their power electronics.
If they decided to do this, they would do it really well.
Yeah, think about it. If Elon puts 100 engineers on it for 6 months, like they would.
No, he needs 10 engineers for 3 months.
Yes, but what I'm saying is, if he did 100 engineers, right, for 6 months, they would come up with like a crazy thing. And he adds on the AI, right, the whole FSD onto that, and then you've got this mega product that
I just don't think it's on his priority list for 10 years, and I think I can have the vehicle ready. And let's say in my dreams, I have a production ready vehicle in 3 years, and I've actually produced, 100 of them, and I'm actually testing it in the Bahamas or some Caribbean country because that's close.
Yeah.
Right. Yeah. I'm here in Florida, maybe I don't know if I'm going to be here that long. I'm going to be in Texas, wherever I'm going to be. But somewhere that's reasonably, like, I don't think I'm going to be flying to India all the time, right?
Yeah. Yeah.
Or Egypt. I think that, like, my vision, anyway. So, all right. So thank you for listening to my crazy
Yeah.
idea.
Yeah.
I think that was all I had. Anything else you wanted to talk about before we wrap up?
No, I just like, to be honest, like with the Tesla bot, I just think my head is still rolling, going in circles from Tesla AI Day. And I think part of it is the value of the option call that Tesla bot gives Tesla investors. And it's basically FSD was the thing that gave Tesla this 15 to 20 year like runway of increased revenue and profits and valuation. And like that was great. It's hard to have a company where you could see visibility out 10 to 20 years, right? With the technology. And Tesla had a fantastic, 10, 20 year time frame roadmap with that. But then you add Tesla bot to the picture,
And now you're 50 years.
Exactly. It completely, radically transforms the long-term perspective or prospects of Tesla. And you might say, people might say, oh, but it's a gamble. We don't know if it's going to happen, et cetera. We don't know how much it's going to cost, whatever. But fundamentally, the magnitude of the total addressable market that the Tesla bot is addressing is the biggest market in history. And the technology itself is the most powerful technology in the world. It's AI.
Let me ask you about that. I look at Tesla Bot. One of the conversations a lot of us have been having is how much will Tesla Bot cost?
Yeah.
And I look at it and I say, well, it weighs 125 pounds. A Model 3, a $50,000 Model Y weighs 4,000 pounds. So it's a lot lighter.
Sure.
So there's a lot less molecules or mass going into this thing. It's got something like 40 actuators. It's probably about the same as in a car. It's got a lot less batteries, right? It seems to me it should cost a lot less. Once you're manufacturing at scale, it should cost a lot less than a car. Not like $10,000. Like it'll cost Tesla to build it significantly less than $10,000, maybe even $5,000 or $2,000. And then the challenge, what people don't get is what Dojo does, what the AI work that they're doing is, like when Boston Dynamics gets its bots to walk, it's like hand coding how they're going to walk. When Tesla bot walks, it's going to learn it from it's going to learn it by trying it and getting it wrong and trying it and getting it wrong. And I almost wonder if they're going to try it in simulation. It's going to learn from simulation how to walk. Then it's going to actually walk in the real world, and it's going to learn to walk so fast. And learning to use its hands to lift things. It's going to learn that. All of that is part of the learning process. And then that's where Dojo 2.0 comes in. Actually, that's a question I have for you. We saw Dojo, what's coming? And they mentioned the next generation Dojo is coming. Do you think they build more than one Dojo before the next generation Dojo comes?
You mean Dojo, their chip?
The Dojo computer. They have this big, this row of chips or the tiles. They're going to have, I don't know, 150 tiles or 120 tiles. Why wouldn't they make more than one of them?
Well, I mean, it's like flexible, modular in the sense they could make the computer unit as probably big as they want. So, I mean, I think their whole idea is of course, they're always working on the next product after they finish their current design set. So now they're ramping production of the Dojo, chipset and all that. And then they'll be making their Dojo supercomputer and they'll grow it. And I think they'll just make it as big as they can, and expand it. And then when their new chipset comes out in maybe 3 years or 2.5 years, probably they'll just, make a whole nother computer. And who knows, they could chop it up for different, it might be useful to have 2 or 3 of these things, for different tasks.
I just think if it's tremendously valuable and you've made one, it's probably less expensive to make the second one. And then less expensive to make the third one. And then going by the FSD chip in the car, that's been, like we're not expecting to get the next chip until, basically it's like a 4-year cycle. I think it's a 3 or 4 year cycle. we're not going to see the next round of Dojo for 3 or 4 years. If it's successful and it works, then why wouldn't you either make it bigger or make more of them?
Yeah, definitely. I mean, they'll do anything that makes financial sense, meaning the cost, per compute that power that they need, if they can get it down to a certain level. On your point about the cost of a humanoid robot, so one of my first conversations with James Down was back in November of 2020, and he mentioned the possibility of a humanoid robot, because I'm like, what else could Tesla do with real world AI? And James at that point said he had looked into it actually before in the cost of parts, and he thinks that a humanoid robot could be put together, and sold for about $10,000, right?
Right.
And I think that's, to me, that's a reasonable price if you think about it. Like,
well, the value is insane.
Yeah, but here's the thing: you do $9,999, and then you do a monthly subscription. So you have to kind of, it's a required subscription, like kind of Peloton, it forces you to subscribe. But you do a monthly subscription of $200 or $300, I don't know, something where you're making the most of your profit off of subscriptions. And if you got millions of these things, or even tens of millions or hundreds of millions eventually, all doing monthly subscriptions, right? I mean, this is going to be huge, potential.
Yeah, I also thought Tesla could have its own fleet of bots, just like they're going to have a fleet of robo-taxis. And then you don't need to own one or even rent one. You just say, I need a bot today, right? Can you send it? And maybe they have, maybe they don't, each bot doesn't know how to do everything, but it can download the module. Like, I need a bot to help, clean my yard up. And it downloads the clean the yard up module before it comes over, and it delivers itself, right? Yeah. I don't know if James said this to you, but he's like, why not put the bot on a scooter? And it just scoots over to your house or delivers whatever. So I think there's a lot of big applications for it. All right. Anyway, I've kept you too long. I want to thank you so much. If there's nothing else you wanted to talk about.
Yeah, no, that's it. I had a fantastic time chatting with you, Warren.
Thank you, Dave. Thank you so much. That was a great conversation as far as I'm concerned. I learned a lot. I want to thank the Vasa law firm in Sweden and all my Patreon supporters for helping this channel grow. You can support the channel on Patreon here. Check out the t-shirts at elonbits.com, the machine that builds the machine, lots of other t-shirts, the stainless steel water bottle. Check out my other videos. Check out my political channel on locals, links to everything in the description below, and thank you so much for watching.